this series is the second video or the second segment of the research management process. In the previous conversation, we just touched upon the high level overview of the research process, the different kinds of styles of research, the role of data, what's quants, what's fundamental, what's technical analysis, and so on at a very high level. So today we are going to cover fundamental analysis, and I guess my question is going to be same to begin with. What is fundamental analysis in investment management process?
Okay, thanks, Ashutosh. As the name indicates, fundamental analysis, you want to understand the fundamentals of a company before you want to invest in, right? And by fundamentals, I mean we can probably divide those into two parts. One is the quantitative aspect of it, and that is the qualitative. The quantitative, again, in two parts. One is the macro fundamentals, how the overall economy is performing, how the overall sector is performing, what is the outlook on, say, on a country, its growth
So
prospects.
not just the company, but also the paraphernalia around it that can impact it.
Because that could determine which markets you enter in, whether it's right or wrong, right? And then is the micro, where you do an in-depth understanding of the firm. You try and define the revenue drivers of the firm. What are the profits, how the profits are generated.
Right.
A lot of this science is something, if you've heard of Benjamin Graham, the guru of investing, who published his famous book Security Analysis about 80 years back, right? When there was nothing up to, especially during the Great Depression, which happened, where he came out with this whole concept of value investing, right? Where you uncover undervalued companies, right? So this was the quantitative aspect. Then he also talked about the qualitative aspect, is where you try and understand the management of the company. What is their vision? Do you really believe in that, the vision or not? And that involves a lot of critical thinking in understanding the company. And then using both of these qualitative and quantitative approaches, you try and come up with the intrinsic value of the company.
So there is this element of the qualitative and quantitative aspect, and then there's other element of, it seems what you're suggesting is sort of taking a top-down view of the world, and then in another case kind of taking like the bottom-up view of the world.
Yeah, and the other way to probably look at more philosophical is in fundamental analysis, a combination of art and science.
Right.
The science, the mathematical aspect is what we call the quantitative, where you understand these ratios, the balance sheets,
the P's and EPS of the
and
world.
art aspect is how do you interpret those numbers? How do you critically evaluate those numbers? You and me can arrive at different conclusions going through those same numbers. But yeah, so essentially fundamental analysis is almost like you own the company, right? You are running your own business, and how will you invest money to generate more revenue?
Right.
That is, I think, the mindset of a fundamental analyst. So it's a long-term view. And we have seen a lot of examples where people have made success out of that. Say Warren Buffett, in somewhere, I think in late 80s, invested $1 billion in Coca-Cola.
Yes.
And he's generated huge returns out of that because he invested in a brand which was unique in its category, the number one in its category, and consistently been investing into its brand. Similarly, somebody who would have invested somewhere, I think, early part of 21st century in Apple. At that time, if you remember, Apple was not doing great, right? It's only when Steve Jobs came back,
yes,
he started creating those iPods and iPhones and whatnot of the world. Initially, it was all a Microsoft-driven technology industry. If somebody did that fundamental analysis, invested at that, 20 years later, they would have reaped huge benefits.
Right.
So it's a long-term vision. You might have failed as well, but it is about you believe in the management, you believe that they are doing what they are doing with conviction, and you investing for the long term.
It's about the business, the company itself, the combination of the management, the business strategy, and so forth.
There are some examples as where fundamental analysis may not have uncovered everything, might have faced a loss as well. I don't know if you remember early part of, again, 21st century, Enron.
Yes.
Analysts go through their balance sheets, but you never know what was happening within those balance sheets. Somebody could not figure out there was something not right going on. The company collapsed and a lot of people would have lost money.
Right.
So, but essentially what I personally believe, fundamental analysis done properly with that keeping both the qualitative and quantitative aspect in mind, long term will always generate returns.
So we spoke about top down versus bottom up. You spoke about taking a long term view versus a point in time. But from a fundamental analysis standpoint, where does it start? I'm just almost imagining an analyst sitting in an office, for example, or somebody who's aspiring for that job. What would his life look like?
Somebody who loves that job, it's a very fulfilling job. Is that ability to get into questioning. I once attended a talk from a fund manager. He said, typically when you do a Google search, a layman, you get 4 or 5 pages of Google search, right? You will see the first 2 searches and go away, right? If you go to the second page, you probably are more interested. If you go to the 6th or the 7th page of that Google search, I mean, that is what a research analyst would do.
Right.
Because that is the hidden.
Yeah, because typically what you do is if you don't find it on the first page, you change the search as opposed to going to the 6th page.
Yeah.
So you're completely relying on what Google is presenting, its vision, its algorithm.
It's something Google is saying this is the top priority.
Yes.
Analysts probably go and see the 10th page of the search and see if there is something going on. And that's where you start uncovering those themes and why do you want to invest. So I think that is a typical mindset of an analyst, that ability to go deeper and deeper and uncover those themes.
So that's very interesting. So now we spoke about the fundamental research, the components of it. But if I look at, for example, the private assets, right, or the whole PE kind of side of it, versus let's say the capital markets, is there a distinction between what you do, how you do? So talk about that a little bit.
Okay. I think the fundamental principles of analysis I don't think vary between when you're investing into a private firm or a listed company, because you still need to understand the business drivers in which that company is operating, is individual driver. I think the main difference comes in terms of availability of information. Publicly listed organized firms by law are supposed to publish out all their financial statements. They come out with their quarterly talks with analysts. There's a lot of public information available.
And hopefully a lot of regulated.
Yeah, because it's a highly regulated market. Retail investors like you and me are also investing their hard-earned money. So you have regulation, every regulator. Private equity or the private assets market is not that heavily regulated, but still you would still, as a hedge fund or an asset management company, if you're investing in private assets, you still need to generate returns for investors, right? Because you're charging them fees. So I think it's the availability of information and how do you process. So information is again expensive in case of if you want to analyze information, the data is expensive. There are very few providers of data who will charge a premium. So is that ability to sift that information, and here sometimes technology can play a big role in processing that information, and a lot of time you also need to use alternative data to say analyze a company. Suppose it's a new supermarket chain that has come up, which is still not gone out listing. So can I use satellite images of its parking lots?
Yeah.
Kind of cars and the number of cars which are there in the parking lots to determine, okay, what is the kind of traffic that company, people are coming to the supermarket to buy. So we are seeing a lot of those things happening, and that is also coming into the public space as well.
Right.
But I think that is where there's a key big difference.
Right.
The availability and the kind of data that you need to analyze information. But and some of these ratios, like what we call as the PE ratio, is no longer relevant because there's no price.
Right. Of course. Yes.
So again, you have to, I would believe private assets make you follow those fundamentals of investing much more than even publicly listed assets.
Right.
Again, you have to create the business model. I think that doesn't change. You have to understand the drivers of that business, how does it generate money. So that doesn't change.
So essentially how you measure and what data sets do you use to measure, and hopefully the platforms that you're using to do that, because these are privately listed companies. There are not too much information available out there, and there are very limited platform providers who can offer that kind of information. So that's very interesting. Now tell us about when you are sort of analyzing these private assets, for example, and to our viewers, if you kind of trying to understand what's the difference between private equity, venture capital, and so on, please refer to our previous video. I think we touched upon that. a little bit in that one. So now talk about the availability of data sets, the role of technology within this space, and if I'm envisioning, let's say, a platform that can help me do some this kind of work, are these like two distinct areas that have no overlaps, or is there, like, from a technology perspective, these are like very closely related, or you probably can look at it in a more coherent way?
Okay, so coming back to technology, I think one thing I would like to emphasize, probably two ways in which technology can intervene. One is the whole research workflow, the way information travels between various investment professionals within an organization. How does allocation of work happen? How's a research notice published? Fund managers commenting on it, investment guys driving various improving the investment thesis based on the feedback they are getting. The other key aspect is data. Right, because essentially, like I think even last time we talked about, the investment management industry is essentially data.
Yes.
Like the more the data you have, and your ability to remove noise from that data and generate useful, high quality information, high quality data on which you take investment decisions, technology can play a big role.
Yes, of course.
And that is where I think most of the focus is at the moment. You can go to many public sources which are freely available. You go to paid sources, and in case of private assets, it could be even more very specific to a market or to
Yes.
some data. Is the ability to process those multiple sets of data in multiple kinds of formats, but present it back to an investment professional in a consistent way,
Right.
with the right quality.
Yes.
And especially with the advent of technology and AI, I think it is becoming even more and more important.
Yeah.
That you provide with the right quality of data.
Right.
Because if the data is bad, like with any
Right.
other technology solution, is garbage in, garbage out, right?
Right.
If you are not able to provide the right quality of data.
So the key is to be able to ingest data and then sort of model it in a fashion on which then the distribution of the data, which is the consumption side of it,
Right.
of what you're creating by either portfolio managers or collaboration between research analysts, kind of is the key to sort of envisioning a platform, or when you're kind of evaluating a platform that serves your purpose. So kind of that workflow management is important. Interesting.
Yeah, I think I like to pick up on that point of collaboration you mentioned. I think in my experience, what I've seen is collaboration one aspect. I think where technology so far has not been able to provide, I think, the right solution, but that is very essential if you talk to some of these investment professionals. I mean, end of the day, it's a knowledge intensive industry, and for knowledge to increase, you need a platform for these investment professionals to start interacting. I mean, if technology can provide the right collaboration platform in which it allows for a very natural way of collaborating and interaction between these investment professionals, geographically in a much wider geographical area as well, it will probably improve the quality of investment decisions as well.
Right.
I think that is one area where I believe personally technology can be a big enabler, especially in improving overall research process, whether it's even a buy side or a sell side firms, or even for an individual investor who's doing investing on their own.
Very interesting. On the platform, it seems like this could be a topic of conversation in itself. So let's see if we can do a separate conversation on the platforms and the nuances of it, although it was not initially intended, but
Right.
I think it will probably be of interest to some of the people. I want to take two questions that I just now received. I think these are questions from some of the people who have been listening to the conversations. And I think one of the questions is from this student who's a BTech graduate, done mathematics, knows Python and programming languages and stuff like that. And I think he's been offered a role in an investment management company, and he's more focused on some of the quant side of things. And the question is that whether it's a good decision from a career progression perspective, and if so, then what is it that he needs to do to make sure that he's excelling in the area? So
Okay, I think that's a very good question, Ashutosh. So quant is quite an interesting area for new budding engineers. I mean, they have a very sound training in mathematics and statistics, and a lot of them are computer science graduates, or even in alternative other engineering disciplines. They've done a lot of coding. Like you said, they've built expertise in Python or many of these languages. In fact, quant, most of the languages you can go as a quant analyst. But I think there's another dimension to it. Quant you also need to understand the finance as a domain as well, investment management, the type of instruments and difference between an equity and a bond, how those are valued, how their valuation happens, how do they trade in on the market. I think that is also a key aspect of becoming a successful quant developer, apart from having a very sound ground in mathematics, statistics, and programming.
You spoke about domain is important. Are there any recommendations? Where can one learn from? Are there any books, courses? What do you recommend?
I think there are a lot of courses, a lot of these MBA programs offer finance specialization. You could go in for a CFA, which is very specific to the investment industry. There are a lot of CQF as a course which focuses on quantitative finance. People can go for that. So there are multiple kinds of courses where people can learn the domain. But I think, there's a lot of, I think in today's world where everything is online, you can also develop your own, go through study material online. But I think understanding the domain is critical, irrespective of any industry you're getting in. If you understand the industry, you understand the context in which that model is being built, because a lot of this model requires a feedback loop as well. You just can't develop a model in isolation. It can't just be based on data patterns. So for that feedback loop, you to understand the context, you need to have understanding of the domain as well.
Right. And in terms of application, quants, because it seems like it's probably a loaded word like many others in this industry and many others likewise. Are there like more nuances when we're sort of using the word quants? Are we referring to like one specific thing, or there are different ways or elements to this that one needs to understand?
I think there are two broad ways where quants have become very prevalent in the investment industry. One is the whole quantitative model investing, popular by some of these hedge funds, Jim Simmons from Renaissance Technologies or Bridgewater Associates of the world, who completely rely on processing of data, understanding or unearthing of patterns, and based on that, they develop proprietary investment strategies which are kept a closely guarded secret on which investing is done.
Right.
And one of the advantages is processing data, you remove the human bias or the human emotion element from investing, which could be a big game changer in because, as some of our behavioral finance theories show, fund managers are also impacted by the way their emotions can play a role.
Yeah.
And they have been successful as well. Many of these hedge fund funds, and they've delivered super natural returns over a long period of time. There have been some failures as well. But again, many of these are hedge funds, which don't have that kind of a regulation. I think one of the problems which I feel now with AI also coming in and more models being built with deep learning neural networks, many of the results cannot be explained. These are black box kind of outputs. And especially when retail investors are involved in asset management companies, a lot of regulators might come and ask for the rationale behind an investment decision.
Yeah.
Which some of these models may not, at least with the current algorithm and technology, may not be able to explain. So within asset management firms, now there is a new collaborative model that is coming in. It kind of brings a symbiotic relationship of human intuition combined with the signal generated by these models.
So basically the models don't become agencies of their own.
Yeah.
They kind of bring in the right level of, let's say, of like a check or maybe calibrated process to say whether to what extent you want to use technology as a tool. That's very interesting.
And especially in the mutual fund industry where you have retail investors putting in money, I think that because this becomes very important.
Right.
Because the regulators want to protect those small investors. You just can't be taking decisions completely by machines. Even if they're machine-based decision, you need to explain those, need to have a logic behind that. So I think so these are two broad approaches based on the kind of structure which is running the investment structure of the investment management firm running it. It have kind of evolved.
That's very interesting. So I think that's quite a lot to take in. I think Amit, and really, really useful conversation. We'll have to take a pause, but I think we probably have a few more sessions coming up on the overall investment, the subsequent phases of the investment management process that we first spoke about. Just in case you have not seen the previous videos, we started by talking about the investment management process, where Amit laid out the foundation of what we're going to cover in the following sessions. and this is the second session, or maybe the subsequent session, where we have these different segments where we are talking about the different elements of research. So in the coming up session, we'll probably dive into the further stages of this, and maybe look forward to do a separate conversation on the research management platform and how to approach it and the nuances around it. In the meanwhile, if you guys have any questions, please reach out to Amit or myself, or leave your comment in the video. Thank you very much for joining us. Stay tuned. Thank you very much, Amit, again, and look forward for the next session. If you guys like it, please let us know.